Everyone, welcome to your Daily 5. I am your host, Mish Schneider, and let's get going because we have an action-packed few minutes here. So I thought today, with the market selling off, it would be good to look at the stagflation scenario. There's still a lot of mixed feelings about whether or not we're heading into a deflationary period or heading into an inflationary period, or really what I like to say, a stagflationary period where the economy stagnates but raw material prices go up. Something we have not seen really since the mid to late 70s. So I thought we would take a look at first the Treasury Inflation Protection ETF. I think that's going to be extremely telling about where we're heading in terms of stagflation. Then of course gold, silver, copper, palladium. So I want to kind of look around at the metals, go to wood, excuse me, and then finally end with sugar, which is always my secret inflationary indicator. So we're going to start here with TIP. So this is the Treasury Inflation Protection, and it's a bond. And so you can see right here, looking at the actual chart, that we have taken out, or we're just about to take out, the resistance from where we had it. Look where we were here back in March. So this was, before the market actually really took a dive. But nonetheless, here we are right back at it. And considering the day where the market is selling off right here, this is holding up very well near those highs. And of course, if we come down here to our price performance, or our triple play indicator, it's above the SPY, outperforming the SPY, but hitting into a little bit of resistance here, just as you see here with the chart and the historical high up here. And then on real motion, it's cleared all of the moving averages, and it's sitting right above the Bollinger Band. So in essence, I wouldn't necessarily say this is a trade, but what it is a really good indicator that you can ignore the metrics, you can ignore all the talking heads, and simply watch the tip. If there is buying in the Treasury inflation protection, then that tells you that people are certainly concerned. So now if we move along here to gold, I have been on this show many times now talking about gold, how friendly I was to gold, and still am friendly to gold. And we've been buying on every dip, and we actually started to take a little bit of profit here, although we still have a good position on. And the reason why I want to show you this gold right now is because I think we're in sort of this no man's land right here, which means if we were looking at cash gold, we would be saying at around 1770 to 1800 an ounce is now the range that it has to break. So I think you can get chopped up if you're a new buyer until it takes out 1800, which in essence would probably be closer to 170 in terms of the GLD. So that's something to keep an eye on. And then of course, this is well outperforming the SPY. And on the real motion, when I've talked to you before, this was actually coming down in momentum, not that that swayed me from my bullish feeling, but now once again, we've now cleared the moving averages and not quite clear that Bollinger Band. So I think when we start to see this move up, or the spot at 1800, you will see these indicators get much stronger. And from there, we could probably go to 2000 easily. Now, what's interesting in terms of the inflation indicator is the silver to gold ratio, which has still been very weak. And it looked like silver was about to explode, and then we had a surprise gap down today. And so it's sort of holding here on a negative slope 10-day moving average. So at this point, I was ready to be a buyer over 1678, but changed my mind at the end of the day because it didn't get there, and it had an inside day, which means on Tuesday, the range was inside the range of Monday. So at this point now, I would say I would let silver drift around. Of course, we're also longer from much lower levels, and be very interested in this if it clears 17, not only from silver in its own, but also to see if whether or not silver starts to percentage-wise outperform the gold a little bit, which would be another really good indication of the potential of some stagflation. And from there, we're going to go to copper. And I'm finding copper fascinating here. This is actually more tied not just to inflation, but really it's tied to economic recovery, particularly in the housing industry, which has been doing surprisingly well, all things considered. And so this is holding above the 200, but you see I put this channel line here right on top. So we're at resistance right just below that 42.50, and we're just consolidating here as we're moving along. So really what you want to see now now is if copper moves above 42.50, I think that would be a very interesting sign, not just for the fact that the economy may be in a little bit better shape than people think, but also, again, in terms of a metal, would that be an indication of some kind of inflationary period coming our way? And of course, on the flip side now, it really has to hold above this 200-day moving average at 39.50. And then you can see I put the bottom of the wedge line right here. So even if it breaks, it would still have support all the way down at this area down to the 50. Outperforming the SPY. And on the momentum indicator, what was interesting is we had a divergence. This peak here corresponded with this peak here. And then when we match the price here, look what happened. The momentum didn't quite get as high as it did this time. So the momentum needs to improve as well. Now, if we move on here to palladium, palladium is a very different metal. It's not necessarily an inflation indicator, but I really like the chart here because you very rarely see these type of beautiful wedges, as you see here with the resistant lines coming from here, going back to March, and the support, same thing, going back from that low to March to the lows that we're having right now. Now, palladium is kind of used as a substitute for platinum in jewelry, in dental alloys, but its main use is automobile catalytic converters. That's hard to say in the morning. And so what is interesting to me about the chart is even though it's underperforming the SPY and the momentum is certainly not giving us any warm fuzzies, it's sitting right on this trend line right here, which tells me that if it holds and starts to move up and can get back through, let's say 182, 183, then we'd be looking at the possibility of some kind of breakout in this. And that would be another kind of interesting indicator for the economy because of it's so related to automobiles. And of course, if it breaks down, I wouldn't necessarily say this is a great short. It's a very thinly traded ETF, but it would certainly give you information about the economy going forward. And then another one is wood. So wood is also obviously related not only to inflation as a raw material with housing, but also another good indicator of the economy. So this too is kind of trading in line with what we're seeing with a lot of the indices here. So you'd be watching for this to maybe get through 58 as a good sign, but if it starts to break down under 55.30, which is where the 10 is, then we can expect another move down, and then we'll have to see what happens here at 52.40. Essentially, what we're looking at, as this is a reflection of the market, is this big range we're in right now. So it's hard to get bullish and it's hard to get too bearish right at this point. And then finally, this is my secret indicator of inflation coming, and that would be sugar. Now, this is cane. Showing you the sugar futures, I'll tell you right now, it's trading at 12 cents, a little over 12 cents, and cane is an underlying ETF. I still like this. We're long this on a half a position. We're looking to add to this position, possibly on a close over 586 in the cane. I would certainly think that it should hold 550, the 50-day moving average, and work its way up closer to the 200. We're outperforming the SPY, interestingly enough, and we are above the 50, so we're not seeing any major divergence here on the real motion, but it would be interesting if we see a divergence where this actually clears the 200 while this is still making its way up there. Okay, so that's really kind of the bottom line here is watch some of these inflation indicators here. Watch this, particularly the tip, to see what happens there. And don't get fooled by the sell-off in the market here, because it's very possible that we might see a little bit of more buying coming in before we see a final gasp, and that you would really be evidenced through the copper market. Okay, that's it for now. Thank you so much for watching. I will be back with you soon. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.